On today's episode of the Cryptoverse, we take a look back at Bitcoin bubbles. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. Today is Monday, the 2nd of January, 2017. And of course, the biggest news is that Bitcoin has broken the $1,000 price point. Great news. Now, a couple of things before we begin today. We're going to do the normal market roundup, and then we're going to go into the article. But one thing I wanted to say was I wasn't particularly happy with the last few episodes of the Cryptoverse that I've done. But of course, I have to put out an episode every day. And I can't just not put one out because I've already committed to a daily episode. But I wasn't particularly happy. It didn't really meet my standards the last few episodes. And it was just because of the Christmas period. And it was difficult to find time to actually do the episodes. But at least I put something out. But I feel better today. So we're going to have a good episode. So let's get into it. For the market roundup, as always, we turn to CoinMarketCap.com for the biggest winner and the biggest loser of the day. It was pretty close today. Most of the winners and losers are fairly tight in terms of percentages, but there is a runaway winner. It's Swisscoin. Swisscoin, down as the 20th most capitalized coin, has gained 26.25% of its market value, putting a Swisscoin at 3 cents, let's call it 2.5 cents. And the biggest loser of the day is Waves, down 6.9%, say, putting a Waves token at 22 cents. Now, I've played with the Waves platform. It's when it launches, it's going to allow you to create your own tokens on a blockchain and then trade them, do a crowdfund, whatever you want to do with it, right? You can actually download the Waves software now and play with it. It isn't fully launched yet, but that's basically what it does. Swisscoin, I can't quite work out what it does. I did look at their website, but it's one of those, I'd call it an absolute snooze fest, because it's all very general. You could replace the word Swisscoin with Dash or with Bitcoin, and it would all still make sense. It just talks about the benefits of cryptocurrencies in general, but doesn't say how Swisscoin is innovating in any way. It just talks about, no government, no central bank, blah, blah. That's what I mean by a snooze fest. It just is completely forgettable, because there are already coins that do those things, right? So why should I use Swisscoin is the key question. But anyway, that's enough for the market roundup. Let's now look at the Bitcoin price chart. So here we are once again on BitcoinWisdom.com, looking at the price courtesy of Bitstamp Exchange. Right now, Bitcoin is trading at $1,021.89. And if you're looking at this on YouTube, you can see the runaway of the price recently has gone even further. Now, I'll say it again. I was on record a few episodes ago saying that once we broke 800 or 900, there is nothing stopping the price in terms of technical analysis, and that is exactly what has happened. I've deleted all of my psychologically significant numbers and just drawn a new one at $1,000, which is, I would have thought that would be a significantly psychologically significant number because it's got loads of zeros on it, right? But made short work of that as well. She's gone straight through it. In fact, the high of the day was $1,024. If I switch my chart over to the weekly chart, we're now looking at the previous all-time high, on Bitstamp anyway, of $1,163. We're going to talk about that in the main body of the episode with regards to bubbles, because that was back in the Mt. Gox days, I understand. So there we go. There's nothing much to say about the Bitcoin price chart. Lots of volume going on. I'm not doing anything other than probably buying more Bitcoin just as I do every month. But other than that, let's get into the main article. So in terms of the news then, today we turn to Bitcoin.com. My voice is a bit off today. I think I've got some sort of sore throat going on. And my voice keeps going up and down in terms of its depth, but let's see if we can work with it. So this article is from Bitcoin.com. It's a Kevin Helms article. A look at Bitcoin bubbles. When will the next one be? It depends. Do you want to know when the next one is? If you're a speculator, probably. But I'm not really that interested because I'm not pulling any of my money out of Bitcoin anytime soon, or ever, actually. So the article begins by saying, there have been 4 noteworthy bubbles in Bitcoin's life when the price exploded. Being speculative in nature, the bubble may soon burst, sending the price crashing down before settling at a range above the pre-bubble level. Now, it's important here that we get very clear on the definition of a bubble because it's one of those words that can be thrown around a bit too casually. It's kind of like the word Ponzi scheme. That's another term that it's a victim of being used by people who don't really know what it means, and then they just slap it on as a label just to kind of deform or defamate a coin or something like that, or a project. Now, to my mind, a bubble is the portion of the price that rises above the real market value. So let's say that we lived in a world where people only purchased Bitcoin when they wanted to use it for its unique features, right? In that case, 100% of the demand for Bitcoin would be coming from people actually wanting to use it. And then whatever the price was in that situation, I would call that the real market value because the price reflects the value of Bitcoin's utility, okay? And let's say that price was in the region of $500 per Bitcoin. And then let's say the speculators enter the picture and they start buying Bitcoin purely because they want to sell it again for a higher price at a later date and actually just make a profit on that trade. And then let's say that through that activity, they push the price up to $550 per Bitcoin. Now, this immediately causes problems for the real economy because it's making it more expensive for those regular people to use Bitcoin as a useful tool. And at that point, other speculators see that the price has jumped from $500 to $550, and they say, well, they get the same idea. They decide to buy at $550 and then sell it when the price goes even higher. That pushes the price up to $600. And now the bubble part is the $100 premium that has been, let's say, artificially added to the price. So the real market value was $500, and now the speculators have caused the price to go up another 100, right? So that 100, in my mind, would be the bubble bit. So it's the difference between the real market price and the price it's currently trading at, right? Now, more speculators will jump in, and then more speculators will jump in on the bandwagon, and that just continues until the price gets so high that new speculators are just not comfortable jumping in, right? And this is why I mentioned the other day that I keep an eye out for when the price on the chart is, I called it overextended, and because that can be a sign of a bubble. But anyway, once the price gets too high or high enough of a level to put speculators off, new speculators don't come in, the old speculators see that the price isn't going up so much, and they decide to take their profit, right? So they begin to sell the Bitcoin, the price starts to go down, other speculators see the price going down, they decide to sell before they lose any more money, and this is typically what's meant by the bubble bursting, because more and more speculators begin to cash out, causing the price to fall harder and harder until we get back somewhere near that real market price. Because, of course, for those people, Bitcoin is just as useful no matter what the price is, right? It'll always be that useful and they will just continue to use it. Now, these two groups of people are always factored into the current market price. You've got the real users of Bitcoin using it as a tool, and then you've got the speculators buying Bitcoin purely to sell it at a higher price, okay? So now I've set the scene, let's actually look at these various bubbles from the past. So the first Bitcoin spike occurred on July the 12th, 2010. It says here, an article or after an article about Bitcoin version 0.3 appeared the day before on a popular news site, Slashdot. The Bitcoin price jumped tenfold from, it says here, it's 0.8 cents, right? So an eighth of a penny per Bitcoin to 8 cents per Bitcoin over a 5-day period. Now, wouldn't you like to buy some Bitcoin at less than a penny? Of course. So there we go. That's what triggered the first spike. It was news. Now, that article will have brought new people to Bitcoin from both of the groups we just spoke about. New users and new speculators. So then that leads on to the second bubble, which this article calls the Great Bubble of 2011. It says Bitcoin's price peaked on June the 8th, 2011 to a new high of $31.91, widely believed to be due to the Silk Road marketplace gaining popularity. Although it says here that the trigger for this was largely believed to be due to the growth of Silk Road, if that is true, then that's a growth in new users, which will have, of course, been followed by new speculators, right? But the thing was triggered by new people using it for its beneficial features. And I'd say that's typically the sequence. The increase in the real market value comes first, and then the speculators try and jump in ahead of the wave. Because sooner or later, if something innovative comes along, the real market value is going to adjust because of real market demand. And of course, if the speculators can buy Bitcoin before that price adjustment, they can make money when it goes up, okay? So that's why news and announcements in particular have such a big impact on the price. It's in the news that we typically hear about some new breakthrough in security or scaling solutions, right? So moving on to the next bubble here, in green, this would be the April 2013 bubble. It says, prior to the April bubble, the United States Financial Crimes Enforcement Network, FinCEN, issued guidance on digital currencies on the 18th of March 2013. The following day, a new version of Bitcoin, which was version 0.8, was released, and soon the Internet Archive started accepting Bitcoin. All that good news fueled a spike in the price which occurred on April the 10th, 2013, amid the backdrop of the Cyprus haircut protests. So this one was a double whammy. You could even call it a triple. So we've got the FinCEN issuing guidance on digital currencies, which no doubt will have made new people aware of Bitcoin for the first time. We've got the release of the new Bitcoin software, which will have brought new features, new security, etc. And then we have the confiscation of wealth during the Cyprus banking crisis. And I've referred to that situation numerous times on the Cryptoverse because it's a great use case or test case or evidence for the benefits of Bitcoin. So moving on to November 2013. Well, 2013 was a year of bubbles. It says here, after many months of Mark Capelles running a pair of trading bots called Willie and Marcus, who faked volume on the Mt. Gox exchange, speculation grew rampant. Bitcoin's price skyrocketed to an all-time high of $1,242 on November the 28th, 2013. However, users soon discovered that they could not withdraw their money, while the price on Mt. Gox dwindled down to $0 throughout February of 2014. So this one was entirely speculative. If the price on Mt. Gox was rising because of these fake trading bots, then arbitrage traders would have made sure that the price was similar on all other exchanges. So if you can't withdraw from Mt. Gox though, the gains that you thought you'd made as the price rose, they could never be realized. They were just illusory profits. And then the final section in this article asks, when is the next bubble? So let me scroll down to that in the purple. Among many speculators was one by the name of Mark Casey, senior BI developer at General Motors, who recently wrote a blog analyzing Bitcoin bubbles. He claims that Bitcoin bubbles largely follow the hype cycle, quote, because the nature of Bitcoin investment is almost entirely speculative. Speculation is driven in large measure by hype, close quote. So that is to say that speculators outnumber real market participant in terms of actual dollars, which I don't think is too far-fetched at the moment. And this is why I'm so eager to increase Bitcoin adoption from real users, because if there's enough activity from real users, it will actually drown out the speculators, kind of like it does in the world's major currencies like the dollar, the pound, and the euro, right? There are lots of speculators in there, and they do move the price a bit, but there's so many real people using it for real economic activity, it kind of keeps the volatility to a minimum. But, the question is, which we haven't answered yet, When is the next bubble? So let's go to the grey bit to find that out. Here we go again. This is Mike. Quote, once the price, and this is based on his analysis, by the way, once the price reaches a sustained level of 80 to 90% of the old peak, the bubble typically, or the bubble cycle typically starts over again with another bull run. Close quote. He said, after much analysis, quote, I anticipate we have one more plateau, which is likely around $900. He says, at present, all technical indicators are that we are several months away from a new hype cycle and a new bull run. Close quote. So when I read that, I immediately did a calculation. I took the old peak, because I use the Bitstamp price when I do these chart analyses. The old peak on Bitstamp was $1,163, right? So when it was $1,200 odd on Mt. Gox, it was a little bit cheaper on Bitstamp, right? The difference was you could actually withdraw on Bitstamp. That's not important. So I took $1,163. 80% of that is $930. And 90% of that is $1,046. So at the moment, trading at $1,022.97 right at this minute, we are right in that zone between 930 and 1,050. So this guy, Mike, is expecting a plateau around about the price that we're at now before the price takes off again. Now, I wonder whether the price increase that we've seen over the last 2 weeks is actually a bubble. Because like I've been saying, the price is still well overextended and it has to come back down and rebalance at some point. Either way, though, it doesn't make any difference to me. I'm in Bitcoin primarily to free the world from financial tyranny, not to just make myself rich. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by becoming a Cryptoversity patron. From as little as $10 a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I will be back tomorrow with another episode of the Cryptoverse. But until then, it's me, Chris Coney, saying bye for now.